Hello, House Hero Clan, and welcome to Real Estate Deal the Market for July 24th through July 31st. My name is Troy, and this is
Ryan.
Ryan, and he didn't put our little tags underneath here to show our name, but he'll get that corrected next week.
You want him right now?
Maybe, it's nice. I mean, it would be nice to have it once in a while, but...
That guy right there, his name is Troy.
Here's a story. A man named Brady. This is okay. We're done clowning around here. We're in a serious market news that we want to jump into first here. There's been so much news this week. Everyone has been talking about what's happening in the past. Like we've been talking about, hey guys, the market's been hot every day this year.
Yep.
It's all kind of finally catching up to us now. All these hindsight, numbers are popping up on us. And here's a few things that will absolutely make everything crazy about what's happening here in real estate. So, Ryan, go over the active listings.
I was worried you were going to ask me to say something about this because I have not read this slide. I just uploaded it. I didn't read it.
I'm the guy who actually put this slide together. So it says the count of all homes that were for sale given during month. So if you look at June over June, okay, the reason why we're in such a hot market, and we can give you like 4 reasons, right? Interest rates and ease of financing. It went down. Affordability went up, and it really helped everybody else out. And then it's just all the DPA programs, the economy. There's everything at once hit, which was a perfect storm. And what it do? The perfect storm actually hit in the wrong area. And the wrong area is there's not enough homes out there to fill everyone's dream of home ownership. In fact, we're down 20% for year over year. That's actually scary. I know when we look at the numbers, as we thought that we would see after everybody was back on the streets and working again after the stay-at-home orders was taken down, we would see just a ton of homes that had been sitting on the sidelines going active. We didn't ever really see that. We did see a bump. I'll say that much. And we're going to look at those over the last 4 weeks, but we just didn't see that huge bump that we expected. And now we're still 20% down from last year. This just means one thing. The market's hot and it's going
to get hotter. And, when we're sitting here looking at the lack of inventory that's getting listed, and we look at, some of the reasons why that is, and it boils down to we've got historically low interest rates. So people are refinancing their house with these historically low rates and staying in it. They're doing a cash out refi at a historically low rate and then adding on. So instead of selling and moving up, they're adding on. And you look at what's kind of people's psyche and stuff like that. They're watching HGTV. They're watching all these television shows, and they're willing to take on a home remodel or a home addition because it seems like fun. It doesn't just seem like work anymore. And with rates this low, they can finance it, and it is a lot of the time it's a little bit more effective or cheaper than going and buying that home up, putting it on the market and then being stressed out about the sale and then the buy up and all that kind of stuff. So you have people that are they're staying where they're at. They like their neighborhood. They're adding on. So low rates are a big determining factor in that. Plus now you've got this, additional pressure with COVID and the coronavirus. You've got boomers. The baby boomers are a historically large population that is starting to retire and move down. So you've got people moving to retirement communities. I mean, there's no way you're going to put somebody in a home right now and you'd be like, what are you trying to kill me? So you've got a lot of that stress. I mean, obviously people still need to be moved into skilled nursing and things like that, and have that stuff. It is happening. Don't get me wrong, but there's a lot less of it because people don't want to be moved into a nursing home right now. You also have people that maybe were moving out of state. Well, they don't want to be putting their home on the market and having people, trouts through there because they are, a category that's a higher risk, and they're not traveling to these other communities to go visit and things like that to fall in love with these other homes. So what do you have? You have boomers that are not moving out of their homes. You've got people that are refinancing at historically low rates and they're just waiting it out. They're this is going to be their home. And that's why you've seen home ownership rates jump from an average of people being in their home 5 years. We're up to 10 years and climbing. And I think that's just going to continue to rise. And these volume numbers are going to keep low forever. And what is that going to do? It's putting a huge pressure on entry-level homes. And I think, Troy and I were talking about earlier today, to get into some of these homes now, you're going to have to, most likely take out renovation financing and things like that if you want a home that's turnkey ready.
So you just rolled right to this slide, which is really good. It's home ownership rates soared to almost 12-year high. Well, 12 years ago, what was happening? It was actual peak of the worst market, worst housing market of all time. And it's peaking because we had everybody was qualified for a loan. So everybody's qualified for a loan. We already caught up to that moment. Right?
You get a loan and you get a loan.
Right,
Everybody gets 4 loans.
Yes.
Go buy 4 properties.
Buy one.
Pick up a 6-pack.
And before we go on to the next slide, I just want to make that point of these last 2 slides is that if you look at just the television and the marketing over the last 10 years on HGTV, or it doesn't even matter what programs, you're looking at everybody was flipping homes, flipping Vegas, flipping Atlanta, all these flipping programs are out there. Now we're seeing something different. We're seeing renovation programs that are coming out because there's no risk in renovating your home. It's the investment you live in. It's not some investment that's down the street that you're borrowing everything, every penny you have, and you're putting everything on the line, and now you're going to suffer through it. So with that being said, that's why home ownership is at all-time high. And actually that's actually a phantom high way back 12 years ago.
People, we talk about we're becoming a renter society, but what's interesting is to see this chart, pop up, and it said, hey, the home ownership rates are actually back to a 12-year high. That's actually really, really comforting to see. I believe everybody should be a homeowner, especially if you're planning on being somewhere, for a good amount of time. And it's nice to see it. And, I know they break down these numbers even further, whether it's Hispanic market, black market, stuff like that. Those numbers have also increased, which is fantastic. And I think one of the biggest things holding back some of those other demographics is just the education. And that's why, we like being here, educating and empowering, so people know what it takes to take that first step into home ownership, and they're not afraid to do so.
And the entire process.
Yeah, absolutely.
Right. Next slide there, Ryan.
Pop into that one. So
these actually, the next 2 slides really kind of coordinate with each other.
Yes.
As we, when we first entered this market, actually, let me go back. When we first became real estate agents, it's been about 14, 15 years for myself. We never released contingencies. We had those 3 contingencies all the time: inspection, appraisal, and loan. And as the market got hotter back in 06, 07, 08, we started to see a little bit of that contingency being released up front, but more or less it was all about price. Why? Because every lender out there was just loaning on anything.
You
and
weren't worried about
didn't
getting
care.
that loan. Yeah.
So there was no oversight, so nobody cared. So contingencies didn't even matter about it. Today, now you have tighter, guidelines. You have so much more of the population at a younger age being educated. And so now we're actually seeing other things happening. And a part of this whole COVID-19, and even when we come out of COVID-19, what's changed our market is releasing contingencies either completely at the front of the offer, or it's during that offer in which, you're releasing them earlier and earlier through other counter offers, right?
So basically this time last year, 13% of people removed their inspection contingency. So that means, hey, I don't care if this foundation's messed up when we go to do our inspection. I'm taking this home as is. I'm not going to back
buying
out
it regardless.
Buying it regardless. Now, that doesn't tell you whether or not they still had at the same time an appraisal or a loan contingency, because they might still have, a way to pull that chute and get out of there okay. But these numbers are key. These are the numbers of people that are waiving their appraisal contingency on top of those that are waiving their inspection contingency. 20.6% of
winning offers.
Successful winning offers in the month of June waive their appraisal contingency. And the reason why prices are going up so fast, appraisers can't keep up, the comps aren't keeping up, and the winning bidders are willing to bring in the cash on top of whatever that appraised value is. So to give you a quick example, if you're doing let's just, To make the math easy, you're doing an 80% loan, putting 20% down on $500,000. You're coming in with $100,000, right? $500,000 property. But if that appraises all of a sudden at 480, you're going to bring in still roughly that 100,000 plus 20 grand on top of it. So you're going to be bringing in more money. Let's call it 120 grand to make the math kind of round and simple.
It's dollar per dollar
over what the appraised value is. And then you're going to get your 80% of that 480 you'll get a loan for, but you've still got to bring in that 20 grand dollar for dollar over that appraised value. The problem is this really hinders a lot of first time home buyers that are, going 3.5% down FHA where they don't have a lot of money in the bank. Yeah. They don't have a lot of assets. So right now, down payment assistance, it's almost non-existent as far as getting offers accepted. It's very, very hard. You've got to be in an area where that property's fallen out a couple times, but it's still loanable, or for whatever reason that neighborhood is a little bit slower as far as days on market. But most down payment assistance offers aren't getting looked at. FHA offers are having a lot harder time getting accepted. And it's really those people that are going conventional or they're FHA and they still have the assets. Maybe they've got a 401k they can pull from or something like that to bridge that gap in the appraised value, because we are seeing these appraisal contingencies waived. And a lot of the time it does come in short. So you need to be prepared to be able to cover that difference. So
these are all good points. We're just seeing a shift in the market.
Yep.
I know that we've gone over the last couple of weeks how COVID-19 or actually beginning of the year where certain lenders as well as real estate agents have begun a new shift or a new paradigm in our industry, and what those paradigm shifts are, and just COVID-19, and how we look at things have accelerated those things and actually brought out some of the weaknesses of the old system that we had in place, and it's really hurting some lenders who are really behind on what's going on. So, but if you want to know more about the real estate process, if you're a buyer and you're like, okay, I want to start, or you've already began that process, or even if you're in escrow, hey, we got the free home buyer's guide, the summer edition that we just came out with. We launched it very successfully. We're getting just inundated by people who want to get a free copy of it. You contact us here, message us, and we'll get you out a free copy of that. This is the summer edition. It goes over several different topics. Of course, the number one thing is, why should I buy now? And why is this market any different than 2006, 2007, prior to the crash? It also goes over, how to pick the right agent, because that is really important as a buying agent. The wrong agent is picking the listing agent. That is absolutely the wrong agent right now, because they're looking at the best interest of the seller. You don't want to be in that position. I know every one of us real estate agents want to be dual agency. That's not the case that's going on right now. You want to find a experienced agent who understands this market. Very important. And we go over that in the guide and a bunch of other things in the guide as well. So I'm excited about it. But DM us and you get a free copy of it.
Yeah, definitely direct message us and we'll get that over to you.
So let's go over the weekly market update. Let's go over actually the numbers. And I call this the numbers. Really interesting here. Again, in every single backyard barbecue, people talk about real estate. It's one of the hottest topics.
Yes.
That's been going on now for 20 years. Due to all the social media as well as the TV, the flipping shows. Everybody's home ownership is on one of their bucket lists. And part of that conversation is foreclosures. And we go over it and over it every single week. We want to show you out there how many foreclosures are available. And in comparison, what we've actually done in the past, we have actually hit the bottom. And me and Ryan had discussed that this was the bottom last week. It is the bottom. 185 total active bank-owned REO, bank-owned or investor-owned REO that's listed in the Southern California MLS that covers out probably about 85% or 90% of all Southern California.
Yep.
You're looking at 185. Now, in comparison, we had probably at one time in 2009 or 2010, we had 50 listed active properties ourselves with an additional 200 that were going through our processes from the very beginning of receiving it to getting it prepared to go active. So these are the numbers we're seeing. It's at rock bottom. I still get hit up by some of my some of the followers we have, friends, family. Hey, Troy, I want to buy a foreclosure. Yeah, if you want to buy a foreclosure, you're going to pay over market just like everybody else is paying.
Well, and that's true. They're going to be on the MLS, So unless you've got cash and you're willing to take the risk, there might be other liens on the property, and you know what you're doing, and you can get down to the trustee sale and buy it cash, and take on all that risk that maybe there's an IRS tax lien, following that property, or some sort of other, second or something on it. It's going to be on the MLS just like a normal listing, and you're going to see it.
Yeah.
So
any investor or bank wants the most money for their property.
Absolutely. They know what they have.
Please understand that. That is a big misconception that's going on out there. Oh, the banks just want to dump it. They think about it. Back in 2009, Wells Fargo got $25 billion to stay in business. Do you think that they're dying to dump a property that they're gonna go under market $20,000? They're not. They have that soft, cushiony fall back to, yes. Right? They have it, and the federal government's going to bail them out like they bailed Wells and all the other companies out back in. They're not dying to dump properties. In fact, they're a for-profit. So let's be very honest. They're on the stock exchange, and they're there to see their stock rise. And it's not by dumping properties
because they're scared to have it. Yeah.
Right. That's not it. Please understand that. Maybe in 24, 36, 48 months from now, we might have a different conversation about it. But even back when me and Ryan had hundreds of REOs, they were still looking at market value. They were not sitting there saying, I want to dump it.
Yeah, they would list above market value regularly.
Right. And they only would sell to owner ox. They weren't looking for a guy who was coming in and offering $100,000 less.
Yep.
They just weren't. So let's go look at the numbers, Ryan. Talk to me about these numbers. What do
LA
you
County, LA County, again, we've got more properties going pending than are going active. And this is across all price points. That's really key because in LA, you've got some high price properties that traditionally stay on the market longer. So when you see homes going pending at a clip faster than they're hitting the market, the market's hot, and that inventory is absolutely drying up here. And that's what you've got. And here you got trailing, roughly 30 days. The solds are coming over that are above what the actives were, around the same week roughly.
So if we take a look at all four markets, and then it's actually emphasized here in Los Angeles County and Orange County, what's scaring me is that as July hit, we saw a influx of new listings hit the market. Some of the highest amounts that we've had all year long. So we were all excited as a real estate community to see that. And we were hoping that trend would continue. But if you look back, we peaked that first week.
We peaked.
And then it just has gone down.
Yep.
But that's 50% of the scary part. The more scarier part is look at the solds. The solds haven't gone down. Every single county has recorded more solds the week. Actually, that week ended last Sunday. Recorded more solds that last week than they recorded solds any time in the last 3 months.
Yep.
So we're simply looking at a peak, and now we are coming down off the crest on the actives. But the solds are saying no. We're continually going up and up and up. And as we see, we're seeing slight bumps across all four counties in home prices. Right. So look again. Here we go again.
The actives.
The actives are just tailing. Look at the solds in Riverside and San Bernardino.
Riverside County, it's wild. You're 2 for 1. For every home that comes on the market, 2 go pending, and roughly 2 sell.
Yeah, it's unsustainable.
And it's over that, in San Bernardino. And there you go. Like you said, this kind of stayed fairly flatline here, but it's declining either which way you look at it. So we've had less listings hit the market as July has progressed. Pendings have just been on a tear. Solds have been on a tear.
And they keep going up. This is the highest amount of solds in the last month.
Riverside's pretty scary for sure. And then it's very interesting to see the taper off of new listings as, Orange County is just still going through the roof on pending. So all of these just say, hey, there's not going to be anything lit.
Let's go to the medium home prices, Ryan.
Yeah. So here's your median home price. They're staying solid, on that uptick. So you've got that's LA County, I think here. You've got Orange County up top. Orange County has been, I'd see, one of the cooler, markets. And I think a lot of that was because you have so many, properties on the upper price point. A lot of South County, the beachfront, stuff like that. It is very, very expensive. Well, and as a percentage of the housing stock, it's a higher number, I believe, than LA.
I mean, look at these numbers. They're incredible. We're having 2 counties out of the 4 that are averaging over $700,000.
Yeah. And you got to remember, LA County, people think like, oh, LA, I mean, they've got some high-end homes. Don't get me wrong. You've got some beachfront stuff. You got Silicon Beach. You got Brentwood. I mean, you've got all that stuff. But you also have Palmdale, Lancaster, pulling in the 3s and 4s. Right. So you've got something, that's pulling down with a lot of housing stock still that helps, keep this median a little bit lower than Orange County. But it's solid. I mean, they're both solid. But I think that's why Orange County has been, fairly flat, because you're seeing a lot of the entry level and move up sell, and a bunch of the high has kind of been slow. But I have a feeling this is going to start ticking up here as well again and start taking off.
Well, when you have less homes, let's look at the bottom 2 here are our Inland Empire.
Yeah,
where we saw a 1% jump week over week. In San Bernardino County.
Yeah, it's kind of nice. It was a nice straight line, Riverside County. So $5,000 a week. The median home price jumped by $5,000 a week, which I'd say that's average for most of the comps that we saw. Every time a new home would hit the market, boom, another week, boom, $5,000. And I mean, that's what we're seeing, so you're showing a $15,000, swing right here. I've seen that. I've seen properties that have, next one comes, neighbor's home comes on the market, identical property, $15,000 more 3 weeks later. So, and this
is week over week. So basically, if you're looking at a $15,000 within a month, we're looking at 3.5% price gain for the county.
Yep.
In a month.
Yeah, it's nuts out there.
Yeah.
And there's just no real sign of any of that slowing down because demand is there. People want to
look at San Bernardino County. Look at that jump this week. And we expected the jump. We didn't expect it to hit in the 370s. It's 379. Huge jump. I mean, literally week over week, it took a jump. Now, this can be obviously momentarily, just a week-to-week basis. We're going to find out next week. But 379, is fairly large, and it's ominous for people who are looking at entry level homes because you're just in the 300,000 range. You're just going to have to pick whatever is left out of the ashes. I'm telling you, that's it was
like the picture we used to show, with all the shelves when you first went to the store. When COVID was really like getting ready to hit that shutdown. Everything was picked through. If you wanted milk, nope, you got to settle for a flavored creamer. That's all that's left on the shelves, and that's where we're at right now. If you're looking for milk, all you got some flavored creamer out there. That's it. That's all you got to buy.
I'm sincerely want to say this, and I've told my client this, and some clients are starting to listen to me. Other clients are just shutting me off. When you're looking at entry level homes in the Inland Empire, and your affordability is $200,000. Don't put your head down. Okay, I've sold manufactured homes, new manufactured homes. You own the land, right? You own that land. It's not like it's not like a mobile home where you're leasing the property.
Where it's just a depreciating asset on somebody else's.
These things are great.
Value.
They're in the 200,000s. Guys, look into this. Do not get discouraged. Right,
that's it. You've got to just be out there and keep grinding. Eventually you will persevere, but you gotta just keep going, and you have to be reasonable. If you're approved up to 350, you need to start looking in the 3s and 315 range to make sure when those offers get run up, that you've got the wherewithal to be able to buy it. And if you're looking in the 650, you need to be at 600. If you're looking at $1 million, you need to start, 950. So just keep that entry price point a little bit lower than where you want to be, because most of these, they're going to have a bidding war. It's going to go over, but you got to get in, you got to play the game. Otherwise you're never going to win. So you just got to be resilient. You got to be relentless. You got to go out there and just keep moving forward. There's no doubt. Like, we don't want anybody out there to get discouraged. There's a home for you. And if you keep going, you'll find it.
Yeah.
So
consult your real estate agent.
Yep.
Think outside the box. do the things you need to do to be successful to put yourself in that situation. Anyone out there that's paying rent is knowing that there's no benefit from it. There's no outcome. There's no retirement. There's nothing that's going to be good except it keeps the roof over your head for that night and that month. And that's it, right? So go out there, work hard, guys. Again, we're very interactive. You can send us a DM. If you want a copy of our home buyer's guide, we'll send it right out to you. Just go ahead and DM us. Otherwise, have a fantastic and safe week. I know it's going to be a hot weekend. So be cool and be safe.
Take care.